Here are the crypto top headlines covered in this video. 2 risks around Bitcoin ETF launch that no one's talking about. Next, spot Bitcoin ETF could bring $30 trillion into the market, says Grayscale CEO. Also, Ordinals have brought digital spam to Bitcoin. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, 2 risks around Bitcoin ETF launch that no one's talking about. In a December 19th podcast, Coinbase researchers warned there are at least 2 potential problems that could arise with the launch of spot Bitcoin ETFs. The launch of spot Bitcoin exchange-traded funds in the United States could cause a shortage of regulated Bitcoin and hurt one popular trading strategy, according to Coinbase researchers. There are less than 3 weeks left until a potential approval of spot Bitcoin ETFs, with many believing trading could begin not long after. However, Coinbase's head of institutional research, David Duong, and senior sales trader Greg Sutton said 2 key risks could appear once they begin trading. In a December 19th podcast, Duong and Sutton said the launch could cause an issue for institutions sourcing Bitcoin, referring to issuers needing to buy enough Bitcoin to hold in their ETFs. You need to buy Bitcoin from certain regulated places. What if demand is so great that these guys are unable to acquire the Bitcoin they need? Crypto venture firm Bitwise predicted that a spot Bitcoin ETF would be the most successful launch of an ETF product of all time. While he admitted that this is a good problem to have when compared to low inflows, Duong said the sourcing risk was one worth keeping in mind moving forward. Sutton said a second risk concerns one of the more popular institutional trading strategies known as the basis trade, which refers to taking advantage of the difference between the spot price of Bitcoin and the price of BTC futures contracts. Due to the massive uptick in volume on both spot Bitcoin and futures contracts, the potential profit on the basis trade has surged as high as 20% in the last fortnight, according to data from Velo. However, as institutional investors gain increasingly direct exposure to Bitcoin by way of a spot ETF product, the basis will narrow, causing there to be far less profitability in the trade. There are currently 13 applications for a spot Bitcoin ETF pending with the Securities and Exchange Commission. There is a wide consensus that one or all of these products could be approved by as early as January 10th, with Bloomberg ETF analyst Eric Balchanis and James Seifert pinning the chance of an approval at 90%. According to a December 21st X post from Seifert, crypto asset manager Grayscale met with the SEC once more in a bid to push for in-kind redemptions instead of cash creation. An in-kind redemption model is typically seen as more efficient for ETF issuers, as it avoids bid/ask spreads and broker commissions that come from selling the asset to raise cash for issuing shares. Our next top headline, spot Bitcoin ETF could bring $30 trillion into the market, says Grayscale CEO. Jan 3's CEO, Samsun Moh, predicted that Bitcoin price could go to $1 million, while BTC investor Anthony Pompliano said the price won't double overnight. As preparations for spot Bitcoin exchange-traded funds continue, executives from across the crypto community have been sharing their opinions on how the new investment vehicle for crypto could affect the overall markets. In a CNBC interview, Grayscale CEO Michael Sonnenschein expressed his belief that there's a lot of optimism in the BTC market again, and many investors are adding Bitcoin to their portfolios. The executive also said that he's looking forward to the advent of spot Bitcoin ETFs to unlock Bitcoin exposure to a part of the investment community that has not yet had the chance to invest in BTC, Sonnenschein explained. We're really talking about the advice market here in the U.S., which is today about $30 trillion worth of advised wealth. Grayscale is one of the frontrunners gunning for spot Bitcoin ETF approval. On November 22nd, representatives from Grayscale met with the Trading and Markets Division of the United States Securities and Exchange Commission to discuss the details of its flagship Bitcoin Trust, which the firm wants to convert into an ETF. Apart from funds flowing into Bitcoin, Jan 3's CEO, Samsung Mo, who predicted that ETFs could propel Bitcoin prices to $1 million, believes that the ETFs could help in the branding and marketing aspect of Bitcoin. In a thread on X, Mo explained how the competition between asset managers for more assets under management will spur an advertising battle that will be good for Bitcoin. On December 19th, MicroStrategy co-founder Michael Saylor said that Bitcoin ETFs would be the most significant development in Wall Street in 30 years. Saylor explained that the ETFs will be a catalyst that drives demand into Bitcoin. The executive believes it will open the door for mainstream retail and institutional investors to gain exposure to Bitcoin. While some may anticipate that the price of Bitcoin will soar, others think the price won't double overnight, even with the ETF approvals. Crypto investor Anthony Pompliano believes the ETF is an ultra-bullish development, but will likely not move a large market. Meanwhile, Bitcoiner Oliver Velez compared buying Bitcoin ETFs to buying real Bitcoin. According to Velez, buying a spot BTC ETF is like buying paper Bitcoin with a cost charged yearly, while buying real BTC is a once-in-a-lifetime cost. The Bitcoin supporter said that real Bitcoiners will only deal with the real BTC with no custody costs. Our next top headline, Ordinals have brought digital spam to Bitcoin. Would you like the pyramids of Egypt more if they were covered in graffiti? That's the kind of blight the Ordinals protocol brought to Bitcoin. The Ordinals protocol on the Bitcoin network has sparked extensive debate among enthusiasts and skeptics alike. At its core, the integration of non-fungible tokens, or NFTs, on Bitcoin, which the protocol facilitated, is out of alignment with Bitcoin's original design and ethos. It represents a disruptive and unwelcome diversion. Bitcoin was conceived as a decentralized digital currency primarily focused on facilitating financial transactions. Its design and architecture were meticulously crafted to serve this purpose, ensuring security, efficiency, and accessibility. The introduction of NFTs via Ordinals represents a significant departure from this foundational objective. Its implementation raised concerns among some developers and users who describe it as exploiting a vulnerability in the Bitcoin protocol. This perspective suggests that the integration of Ordinals was not a planned or natural evolution of Bitcoin's capabilities, but rather a manipulation of its existing framework. Such a viewpoint casts doubt on the legitimacy and long-term viability of Ordinals within the Bitcoin ecosystem, which also risks diluting its original vision and confusing its user base about its primary function. More importantly, though, the integration of Ordinals into Bitcoin's ecosystem has introduced more than just digital collectibles. It has ushered in a wave of digital clutter akin to spam that contradicts the network's original efficiency and purpose. This influx of non-essential data is not just an annoyance. It leads to tangible issues such as network congestion and inflated transaction fees, straying far from Bitcoin's vision of a streamlined financial blockchain. Faced with these challenges, it's inevitable that the community will develop methods to filter out and eliminate these ordinals from wallets and full nodes. Consequently, the perceived immutability of ordinals is a fallacy. As participants in the network take active steps to remove these digital artifacts, the notion that ordinals will exist eternally within the Bitcoin blockchain becomes increasingly untenable. This dynamic underscores a fundamental misalignment between the nature of ordinals and the core principles of Bitcoin's design, hinting at their eventual obsolescence in a system that was never meant to host them. Ordinals firmly plant their roots on the NFT space, which is often criticized for its elitist and exclusive nature. This contrasts sharply with Bitcoin's democratic and inclusive ethos. Bitcoin's emergence was a response to the centralized control of traditional financial systems, offering an egalitarian alternative. The embrace of an arena known for its exclusivity and speculative tendencies could alienate a significant portion of Bitcoin's community who value its open and egalitarian principles. Integrating ordinals into Bitcoin can be likened to the act of spraying neon graffiti on revered ancient monuments like the Colosseum or the pyramids. These structures stand as architectural marvels and testaments of historical significance. Imagine them suddenly covered in flashy, modern neon spray paint. That act, while undoubtedly modern and eye-catching, would egregiously clash with the monument's historic essence. It transforms sites of cultural and historical reverence into jarring spectacles, undermining their dignity and distorting their original purposes. This kind of graffiti would not be celebrated. It would be seen as an act of vandalism, an affront to the integrity of these timeless structures. In a similar vein, the introduction of ordinals into Bitcoin feels like a significant misstep. It disrespects and distorts the foundational principles of Bitcoin, turning a groundbreaking financial innovation into a cluttered display of digital extravagance. This transformation not only undermines the original vision of Bitcoin, but also challenges the very essence of what made it a monumental breakthrough in the digital world. The Ordinals protocol created several critical problems for Bitcoin: a shift away from its primary financial focus, questions about the permanence of digital assets, a clash with its democratic ethos, and concerns over protocol exploitation. As we navigate these complex waters, it is imperative we consider these problems carefully, ensuring that Bitcoin remains true to its foundational vision and continues to serve its intended purpose. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.